The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Here's what's on deck today. Just going to kind of put this out to you. You probably know about this already. Initial jobless claims 8:30, industrial production 9:15, 9:45, consumer confidence comfort index from Bloomberg, and a couple of these other ones down here. Not a big deal. So that's what the deal is today. And take a look at the scanner. Just want to let you guys know if you're looking at this, we've added Hong Kong, Malaysia, and Singapore have been up there. Shanghai Composite is up there, which is don't know if you guys are following any of those. We also added, the Nifty 50 out of India. And what we're doing, the main reason we're adding those, because I don't think a lot of people probably watching this show are trading those individual instruments. We're going to be able to provide market breadth metrics on those also, which will, hopefully give you a chance if you're trading the index itself. Again, those market breadth statistics are, in my opinion, pretty powerful and give you a little bit of a lead time sometimes in some of those turns on a long-term basis at the very least. So that's the new information that we're looking at on the scanner. And I've got 3 videos up on this thing now if you want to take a look at them. I think this is going to get launched on TFNN, I hope, next week. So kind of excited about that. Well, looking at the VIX here, this is still the October VIX contract. This is the daily situation. And as you can see, don't talk about this a lot. The VIX is definitely something to keep your eye on. But, I look at profiles with everything. So, as you can see, we had that close above, come back down, close above, retest, off to the races. And we're still in the, I wouldn't call it the extreme sections of this at this stage. I think Basil Chapman is just a insane good analyst when it comes to the VIX. I love listening to him about that. But here's the 240. So we got support on the VIX right now, 24.81, and then maximum support really at 21.25 down here. So that's the numbers on the VIX. We don't talk about it a lot. Just want to throw that in. I want to take a look at the ruble really quick again. This is the gift that keeps on giving on the upside, and I really don't know what will stand in the way on this. And as we talked to Eddie yesterday, we talked about, a new box possibly appearing when we have orange here. And, we got it down below the short term. But then, it's okay when we cross the border to get back in these trades. Definitely don't want to be short in this thing. And we reached targets pretty quickly, and now we're trading above 41, amazingly so. I know you guys want to probably talk about the S&Ps. This, without belaboring the point that everybody's making, a lot of volatility. And the 10-year, we're going to take a look at that again. These are the S&P 500 futures contract numbers here. So new box appeared yesterday, but we had those indications, and we've had this box appear in the last eight hours, I guess. Targets down below, just to give you some numbers here, 1820, which we've already reached and come off of. And up top, we've got 1866 up there. But we talked about the real important long-term numbers, 58. And I want to kind of review that a little bit. And I want to go back to the 240. I'm sorry. So yesterday, we came up in pre-market. We're kind of sitting around the 58, 60 area, hit that, sold off tremendously. Came back into that area, came off again, and seemingly don't want to go above that big border around 58, 55, 58, I think we were talking about yesterday. So that was something I was looking at. I actually called some people pre-market when we got back up, or right when the market, it was very early in the market opening, if it wasn't pre-market, when we got near that 1858 area, and we were looking at our statistics here, going back to this, and we were just, bent for leather on the downside here on the metrics as we had rallied big, huge. Sell rallies. That's basically what that means. And we got to a maximum inflection point, a big one around 58. Now, that seemingly was a good place to pick a battle. But those numbers we just talked about are kind of pre-market short-term numbers, because as we look down into the dailies here, we don't have anything to key off of here, and the tone is still negative. And we're going to keep an eye on this as the rest of the show unfolds here. But let's take a look at the 10-year on the same notion. Here we go. That kind of move yesterday, and I think we were up almost 6 handles on the 30-year, which I hadn't seen that since one day in 2008. We were up 8 handles. I was in the middle of that one day, which was harrowing times. That kind of move yesterday, and the 10-year going to, I think it reached, 1.87%. Amazingly so. That was just unbelievable. Those are usually kind of markets going up, and then does the blow-off thing up top. That may be the highs for a while. I mean, I'm talking for a while, because there's not, it's amazing how things change so quickly from complete bliss, like nothing can go wrong a month ago, and now everybody's giving their theories on why this is all happening after the fact. I mean, it'd be nice if some of these guys on TV or these news agencies would actually give their theories before that happens. But, it's just amazing how that's turned so quickly. But the 10-year, in my opinion, with that move up and the rate going to 1.87, really, I think that's a near-term, area that we're not going to probably cross anytime soon, just from the classical technical analysis action that happened there. A couple other things, and another thing too. Somebody in the den said the other day, I think it was Fletch. He was saying something about some guys in Arizona, or they were going to lower rates to try to get more people to be able to buy a house. I mean, those are kind of indicators also. And if you remember that, if Fletch is listening, I was listening. That kind of hit home a little bit. I was like, that's weird. That's crazy. Rates are low enough. Why would you need to make them lower? Exactly. So let's take a look at the NASDAQ really quick. Let's cover a couple of bases here, because on the next segment, I'm going to bring in Mr. Villegas, who's going to tell us a little bit about what's going on in the volatility world of the prop arena. And I'm interested for you guys to hear him. This is the situation on the NASDAQ. Nothing really new here on the daily. There's nothing to key off of. Here's the numbers, 3706 on the bottom. We've obviously been lower and then kind of bounced above there, but that's kind of the fence, if you will, that I'm looking to short below. And again, not looking, I've been talking about shorting for a while here, last month or so. Not really seeing any reasons to try to buy, except on very short-term bases against some levels with really, hard to find stops in, because the long-term market breadth statistics and trend really, technically, damage speaking, is still down. And I get kind of, it's kind of psychologically damaging to me if I try to go long these things when I know that we haven't really been told that it's okay to do that, in my opinion, yet. And then I lose money on it, and I'm like, I was right on the long-term trend, and what in the heck am I doing buying the indices right now in the U.S.? Dollar really quick. Here we go. I was a big fan of trying to hang in there above this 85.39 area. 85, what was that? Yeah, 85.39. Got back down below. I had to call it quits on that. I thought this was a really good gathering action. I'm still kind of, you could look at this as close below, come back and retest that number, but I'm not so sure the dollar is going to fall. So I'm still looking for this to get back into fair auction and hang in there, and then possibly move back to the highs of that fair auction, 86.14.15. So I'm not a fan of shorting the dollar as of yet. Let's take a look at gold really quick. I am bullish on gold. I like the action here. I like the idea that it's, not getting the boxes here yet. On the daily, I like the idea that it's, made this catapult move up, and hopefully we'll get a new set of boxes here to really key off some new higher inflection points. But right now, just trying to hang in there and let it, mull around after it made that catapult move, and hopefully we'll move higher. And I think my target's right now around 1270.75 right now. But again, stops have to be in place. There's no downside in getting stopped out and getting back in something that might look better later. So silver, really quick, just really hasn't, even yesterday, hasn't really closed outside of this fair auction here. And again, we're kind of talked about silver quite a few times about, bottom being 1675, let's call it, top 1772, 73, and just waiting for a close above or below either way. I just don't think this is yet a trade to take a big stance on until we get out of these latest profiles on silver. I know there's some different thoughts on that, and I'm sure that there's some good reasons behind that. Let's take a look at quickly what happened overnight, and let's pull up the Hang Seng. Where the heck is it? Okay. A lot of these Asian indices now are coming unglued a little bit. Some fear in the marketplace over here. Got it. Come on, pop up. Okay, so looked at the Hang Seng. Here we go. These are the numbers, 23,317. Head a little bit lower, sitting right on the lows here. I feel like that's going to be a foregone conclusion for this to break down and go a little bit farther south. So anybody trading the Hang Seng, if you never traded it, can be a wild experience. Gets thin sometimes and jerks around like the DAX used to. And as we're talking about that, let's just pull up the DAX really quick. A lot of comments coming out of Germany, a lot of mixed economic MOs that are coming from different folks over there. And, I'm trying to find a bottom here on the DAX, and I can't. So, it's basically on the DAX situation, let the profiles regulate this down. We are trading below that 87.39 area from yesterday. That was the breakdown point, and we're going to have to just wait for some new information here because there's really nothing to key off of. And again, letting these profiles regulate the trade down in the DAX is kind of how this has worked very well, and I'm not going to veer away from that. When we come back from this break, we're going to bring in Juan. We're going to talk a little bit about some of the things going on in the prop trading world. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were just recently talking about the DAX and finished up with that, I hope. Juan, are you on with us? Juan, are you there?
Yes, I'm here.
Hey, buddy, how are you today?
Yes, I'm here.
Good.
Great.
Where are you at today? Because I know you're traveling.
Crazy.
I know you're traveling up to the States and Miami.
Well, I'm in Colombia.
Okay.
Now. Yeah, Now in Colombia, I'll be in the States starting Monday.
Okay. Well, I think we got that well-loved volatility lately that me and you love, and I just wanted to really kind of ask you a couple of questions. What are you guys looking at as the major, power play that you guys are trading down there right now? What's some of the things on deck?
Well, basically, S&P's down Nasdaq are pretty oversold on the daily, and the weekly and the monthly are hitting some major support areas. So probably we'll get a bounce from this area, and I'll try to play that long here today. I'll not go short anymore. Maybe the cumulative advance decline, which is a major thing that we read on a daily basis, is it's really oversold. So I guess we should be careful shorting more here. We probably get a bounce. It's going to be a counter trend long, but as of now, I'm more inclined towards going long instead of shorting more at these levels.
Okay, so
intraday. The other thing is, yes.
No, I was going to say you are probably saying that you're kind of a fan of possibly not being overweighted on the short side, and maybe trading some contra trend bounces at this stage. Is that fair to say?
Yeah, exactly. That we are pretty much oversold here, and volume has picked up on the past couple of sessions. So there's some, not sure there's going to be sellers throwing the towel and stepping in with a lot of power, but it's too weak to short more. It's pretty oversold. So my guess is we might get a bounce at these levels, and then probably then we're going to make a lower high and go down a little bit more. But we need to stabilize selling a little bit on this area, and we might see that in the coming hours or days.
Do you have any targets on the upside that you guys are looking at down there as we might or may bounce?
Well, the S&Ps, my next target probably is going to be, if it bounces, 1,845.
Okay. All right.
845.
Yeah. Okay. So that's what, about 20 points from where we're at right now, and I think we reached a low this morning of around 1815. So that's about a 30-point move up from the bottom. So 1845 is going to be some of the targets you guys are looking at. What is the rate situation down in the Columbias of the world down there, as we've seen rates just tumble everywhere else? What's going on with the rate structure down in South America? Is that being affected tremendously right now?
Well, it's different from what's happening in the world. We are raising rates here. The economy's been very strong in the past quarter, so right now the central bank is tightening the money supply and start raising rates. So bonds are basically going opposite of what they're doing with treasuries. Treasuries yesterday were crazy. It's just, yeah. I don't know if you have talked about that already, but yeah, we're just waiting for the next meeting of the central bank, and probably we'll get another another raise on rates. So that will lower the price on the bonds here, the treasury bonds here in Colombia.
Wow, that's interesting. That's interesting for people to hear. I tell you what, we are going to go to another break here, Juan, and I really appreciate you coming on today and giving some input on the S&Ps and talking to us this morning.
Sure.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I had Juan Villegas home from down in Colombia, but his connection was a little weird there, so we decided to kind of drop the conversation early. I apologize for that. But one of the things he said, you know, obviously it really sticks out, is they're raising rates down there. And I was in Colombia, what was it? Was it May? I think it was May this past year. And talking to a university down there, actually. And it's amazing. I mean, you know, a mid-tier town in a place that, I mean, I love that country, in a mid-tier town in that country that you would think, you know what, there's probably not a lot going on, but there's a lot going on and the real estate prices are unattainable for most people. I mean, it's amazing what's going on. There's a lot of foreigners going down there to some of those places now, and it's, you know, it's actually just jacked the whole thing up. And it felt like at some point there was going to be a little bit of unrest between the regular population and, you know, not being able to actually kind of go to the next level, because the inflation down there is, you know, very apparent, and real estate prices have really driven that whole thing. So, it's a beautiful place. It's an unbelievable place, actually. And if you get a chance to go down there, please do it. So, let's take a look at Facebook really quick. This was one of the stocks, you know, that has obviously hung in there pretty well. has a lot of Teflon on it when it comes to market relevance. Those weekly unfair lows we sat at around 73. We talked about that last week. We were at an inflection point, but the volatility of this week hasn't really tarnished the shine of Facebook in general. And that down here, that was stop out area, but it was an area to go long, in my opinion, until we get back above 73. We're sitting this morning at around 71.70, looks like, or what is that, 71.60? So, those prices aren't reflected in the weekly and daily bars yet on E-signal. So we're simmering down here around 71.60. But the good news is, in my opinion, I don't know if you should be in Facebook long, but if we can get back above 73, that's going to be kind of okay to be long and not okay to be short, considering, or all things considered, basically on Facebook. Let's take a look at Apple really quick, because obviously this is, what was it, approximately 13% of the NASDAQ now, maybe more. It's up there. And we talked about two inflection points lining up on Apple, just to revisit this a little bit. 97.48 weekly unfair highs and daily unfair lows around 97.66. We tested some folks' will yesterday. Obviously, we went down to about 95. Pre-market, we're trading 95.50 right now. It looks like 95.53, something like that. So, Apple is kind of now breaking down technically on the daily. Kind of stretch this out a little bit, as you can see that over time. And on the weekly, getting back into an area where it may just kind of really bounce around here and meet some targets down below. Considering the technical damage on the daily, the bottom side targets are 90.63. I don't know if this is the best short instrument that you can put on right now, based on some of the things that we always talk about, which are relative strength trading. And this stock is really, all things considered, hanging in there, and it's a huge component of the indices. But if we can actually, let me just pull up the daily for 2 seconds. We had a close below all this, and now we're kind of obviously moving down. But if this thing picks up some momentum, and I hate to use the word if, I don't think it's the best short candidate, but it could, obviously bring the whole market down even farther. I'm just keeping my eye on it. I'm not looking at it as a big short candidate. I'm actually looking at it as a long candidate, getting back above 97.66, if that makes sense. So just keeping an eye on Apple. Let's take a look at a couple of other things. Let's take a look at Google. A lot of news out on Google. Here's the daily situation. That 588 area was kind of the close below, go back and retest, obviously, but what do you do now? Here's the weekly situation on Google. The downside targets still have not been met to complete the whole move down to the bottom of the fair auction, 519.20. We kind of got close to there yesterday. We're trading about 530 pre-market. And here's the short-term levels for Google if you're following it. As you can see, kind of using those 240s to regulate the trade down. Go back, stay below, retest. And this is a good example, really, of something that was all over the board yesterday, from 530 to 560, literally. That is a 30, blah, blah, blah. What is that? 5 into 30. That's a 6% move in Apple up and down, or excuse me, in Google up and down in one day. So, and that's a pretty high price stock. So what I wanted to point out here is, we talk about market breadth all the time, and we talk about, what does that actually mean? So we're taking a compilation of, this is a 240 situation, so I'm just going to say that, let's just paint the 240 breadth a little bit here. As these things were bouncing around and moving, they still never crossed the border, and therefore a lot of these stocks were in the same camp, so therefore the breadth stayed relatively negative. if most of the stocks were in this type of scenario where the volatility was so wild and the sell-off was so big, we never saw a lot of these stocks cross borders and get back into the fair auction or the middle area. So therefore, because of that non-action above those inflection points, that breadth stayed negative, and it will change very, very quickly sometimes. And if all the stocks are kind of sitting on the border of the internals of those, S&P 500 stocks, and then they pop, then we've got some technical damage starting to happen for the shorts. But that's just not happening yet. So again, we're still trying to pick battles and sell rallies based on that alone. Let's take a look at Netflix. I know everybody's got this on the radar this morning. We know what happened there, so I'm not going to beat that to death. Here's the 240 situation. And not a lot to key off of here. And on the 60s, the good news is we'll start having some new inflection points down here. And I think you just got to kind of wait and see on this one. And, you're throwing darts at a board down here probably. A lot of folks are going to be trading this morning. A lot of people when the market opens are going to be either buying more or getting out of Dodge. So, if you want to throw a feather in the wind there, that's probably what's going to happen with this stock. I have no idea what's going to happen, and there's nothing to lean off of. And the reason I'm bringing it up is to just kind of say that, we will eventually get some sanity and we'll eventually get some fair auctions to pop up. But as of right now, it's just, in my opinion, a crapshoot. Let's take a look at Tesla. Let's see how this animal looked yesterday in the midst of all the insanity going on. And as you can see, we took a look at Google, and Tesla was in the same camp, if you can see that. And that's why the breadth statistics never really changed that much. We cannot get back into these, crossing these borders of these meaty parts of these bell curves, as we call them. So, again, it's just another example. Nothing too positive to talk about there. Oh, excuse me. Sorry about that. And what we want to do here is just wait and see and let the daily barometer pop up again so we can try to have something to lean on when it comes to Tesla. I think, again, the pick from that crazy news agency that seems to – you could make a living going opposite their bull pick of the day and their bear pick of the day. It was at 290 when they wanted everybody to go long Tesla. So just buyer beware. Let's take a look really quick. I've got a couple other things to talk about here. Let's take a look really quick. I'm sorry. We need to pull this up here. Okay. So Tom O'Brien was on the show yesterday, and we want to take a look at some things that, we can hopefully pick out as strong stocks. There's not many. Here's the NASDAQ, and I want to kind of focus on the daily situation here. I'm not going to pull up any of these off-the-wall indices here yet, but I want to find out things that are maybe have poked their head above and closed above, actually, giving us, ooh, wow. Well, there's 4 stocks in the NASDAQ that are actually still showing strength relative to profiles. Monster Beverage Company, Costco. We've talked about Costco a lot, and I want to pull that up. Let's get Costco up here. So, again, trying to find strong stocks in a weak market. This thing's lost some ground here, just like everything else, but it's tried to hold at the weekly unfair lows, 123.50 approximately. Pre-market, we're trading 122. Looks like, is that today? Yes. So here's the daily situation: 122.60. Daily unfair highs, a very thin profile that's been in action for a long time. These are things that you want to see because they're very, very powerful. So 122.60 unfair highs on Costco. We're trading about 122 and some change right now, and we've got 123.53 sitting there. So this DMZ between 122.53 and 122.60, we're trading a little bit below there as this morning. I'm looking at something like this, giving myself a little bit more pain factor, and trying to use this very thin collection area similar to the dollar situation, or not the dollar, the Japanese yen situation. That actually didn't end up working out, but using this more of a collection area to try to if you think the market's going to bounce at all, you got to be looking at trying to buy strong stocks in a weak market. This is something that I actually think is not a terrible situation here based on everything we've seen. And all we've done, remember, is we've stayed within the fair auction on our, or actually we're a little bit below there this morning, but this is a pretty strong stock in a weak market, and I don't mind picking a battle on it from the long side if you put a gun to my head and maybe start buying stocks and buying indices right now. Excuse me, let me pull this back up. Here we go. And Monster Beverage Company, we've looked at that a couple of times. MNST. So, obviously had some good fundamental news come out on this a while back. Yeah, so I'm saying they love Monster Beverage. I've never even really drunk one of these. That might be a good thing. But we've got a new weekly box attempting to appear, especially, looking at this orange bar, and we'll have Friday's close tomorrow. If this stays orange, we'll have a new profile way up here, which will be nice. But the dailies, this is pretty cool because now we come down into, again, a pretty thin profile that's very long. I'd be looking at this, if you can stand it, between 88.56 and 91.42 as a collection area. I think we're trading 91.40 something right now, pre-market. So, again, powerful situation on the dailies, in my opinion. We've got that gap up. We've got this thing hanging in there just showing its hand huge to be strong in a very weak market. And these are the kind of things that, these are easy little, or possibly easy little, things to take shots on. And the cool thing is you know where to put the stops on these animals also, because all of a sudden this could give it up. But again, I think you've got odds in your favor here, playing that relative strength game, and knowing where you can say uncle basically is the theme of that. Let's go back into the scanner really quick, and let's get this cleaned up. Let's kill the NASDAQ. Let's kill that. Let's kill that. Let's kill that. Let's kill that. All right, so taking a look at the S&P 500, we're going to go to break in a second and then kind of focus on this in just a little bit. Hard to sell stocks in the whole. I've been kind of focused on the indices myself, but as a shorting mechanism to take advantage of what we're trying to accomplish here. But let's just take a look at the matching results on the daily above the box on the S&P 500. Not a lot here, but got some decent opportunities in my opinion. And when we come back from break, we'll take a look at some of these choice picks relative to profiles, and we'll have about 4 minutes to just kind of mow through those. We'll be right back, folks, in just a little bit. Hang in there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're going to look at a couple of things off the scanner, but I was thinking, we got 4 minutes left. Let's just kind of recap a couple of things. Crude oil. I think this thing's still going lower. I don't think we've heard the big whoosh sound all of a sudden to hopefully form a V-bottom on crude oil. Talked to Eddie yesterday. My feelings after, getting a little deeper into that with him yesterday after the show, you just get this feeling that, somebody starts pushing you with their finger. It's kind of irritating. You don't really, feel it for a while, but then at some point it gets extremely irritating. And I think it's irritating to say the least that crude oil's been going down to Russia, but I don't think there's been the capitulation move on crude oil yet. And I don't really think we've got any bounce potential down here yet. Here's the 240 numbers if you want to hear them. 80.56, 82.75, top of the box. We've had some decent opportunities here with crude, letting this thing regulate it on the way down. We did meet some targets above on our weeklies a while back. If you notice that, we reached 95 and closed below retest on the long term. Don't see any bottom here at all right now. So that's the situation on crude oil. We haven't talked to any about currencies this morning. The yen is kind of breaking my heart here. wanted to pick some battles here in a collection area I was thinking felt pretty good about, and getting back down below 107.07, had to say uncle at some point, and really don't see anything to key off of down here on the daily, which is what I was really hoping to look at here. And on the weekly, we've actually gotten back into the fair auction here also. Now, this is remember, we always talk about, for guys trading the yen, we always talk about the long-term inflection points, but we also take a look at the length of the system itself. And if you look back at the end, this is probably the longest profile you'll ever see. So these inflection points, even though they're not the current inflection point, you've got to pay attention to these. 105.44 was that level. And this is kind of Custer's last stance for a while for the yen, in my opinion. So, I hate to say, here's a place to buy, here's a place to buy, here's a place to buy. Here's the maximum fence, if you will, on that we could lean against. Other than that, we start drifting down here. We just have to wait till we get back above some of these inflection points. So we talked about one at 107.06, 106.15, and now 105.44. Not a big fan of going short this still. So still trying to look for long battle picks on that one. Here's the euro. This thing has been I was actually shocked when I looked at it yesterday, and we had almost gone to 129. That's what stops are for, guys. That's what stops are for. These things can happen. The 10-year can go up 6 handles. That was proven yesterday. The 30-year can go up 6 handles in less than 6 hours. So good lesson there on the euro. Still, I've been banging this thing from the short side, verbally and trading wise, and we've kind of gotten back into sanity here. Here's the daily on the euro before we go to the last segment, or get off the last segment. Still thinking that we've got some short opportunities on this 127.36 and below. We're sitting right above there. That's going to be a massive level to pay attention to still. And still don't feel like this is a close above, go back and retest and go higher. Still a little bearish in the euro. Thanks, guys. Coming up. Tim Basil, David White at some point, Daryl Mark, Andy Heck. And Mark.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.